Good morning, one and all. Myself, Aisha Sheikh. Today, I would like to explain about the management accounting interaction. In business, enterprise must keep a systematic record of what happened from day-to-day events, so that it can know its position clearly. Most of the business enterprises are run by the corporate sector. These business houses are required by law to prepare the periodical systems in proper from showing the state of financial affairs. The systematic record of the daily events of a business leading to presentation of a complete financial picture is known as accounting. Thus, accounting is the language of business. A business enterprise speaks through accounting. It reveals the position, especially the financial position, through the language called accounting. Next, meaning of accounting. According to the process of recording, a classifying, summarizing, analyzing, and interpreting the financial transactions of the business or for the benefit of a management and those participants are parties who are interested in business such as shareholders, creditors, bankers, customers, employees, and government. Thus, it is concerned with financial reporting and decision making aspects of the business. The American Institute of Certified Public Accounts Committee on Terminology proposed in 1941 that accounting may be defined as the art of recording, classifying, and summarizing in a significant manner, and in terms of money transaction and events which are in part at least of a financial character, and interpreting the results thereof. Now we will be discussing main branches which are directly involved in our management accounting. Those are accounting can be classified into three categories. It means that three branches. Those are first one is financial accounting, second one is cost accounting, third one is management accounting. First one is will be explained each and every financial transaction after completion. Cost accounting, it is nothing but the expectation of the cost. If you want to know the future cost of your organization, then cost accounting will be useful to estimate your future expenditure to fulfill your desires. Third one is management accounting. In this management accounting, we have the two parts. First one is management, second one is accounting. It means that in this accounting system, we have two parts. First one is management, second one is accounting. This branch especially explained about how can we manage our accounting in a proper way to reach our goals within a short duration of period, to reach our success within a short duration period. Now, next, we will be discussed briefly about the branches. First one is financial accounting. The term accounting, unless otherwise specifically stated, always refers to financial accounting is commonly carries on the general offices of a business. It is concerned with revenue, expenses, assets, and liabilities of a business houses. Financial accounting has twofold. Those are first one is to ascertain the profitability of the business. Second one is to know the financial position of the concern. Now next one, nature and scope of financial accounting. Because if you want to success in your accounting point of view, you must to know the accounting nature and accounting scope. Scope is nothing but it will be explained about the limitations of FA, nothing but financial accounting. In this, financial accounting is a useful tool to management and to external users such as shareholders, potential owners, creditors, customers, employees, and government. It provides information regarding the results of its operations and the financial status of the business. The following are the functional areas of financial accounting. So these are the main functional areas which are directly indirectly covered in our financial accounting and financial management. Those are, first one is dealing with financial transactions. Accounting as a process deals only with those transactions which are measurable in terms of money. Anything which cannot be expressed in monetary terms does not form part of financial accounting, however significant it is. Now, next one is recording of information. Accounting is an art of recording financial transactions of a business concern. There is a limitation for the human memory. It is not possible to remember all transactions of the business. Therefore, the information is recorded in a set of books called journals and other subsidiary books, and it is useful for management in its decision making process. Now, next thing is classification of data. Classification of data. The recorded data is arranged in a manner so as to group the transaction of similar nature one place, so that full information of these items may be collected under different heads. This is done in the book called ledger. For example, we may have accounts called salaries, rent, interest, advertisement, etc. To verify mathematical accuracy of such accounts, trial balance is prepared. Now, next one is most important procedure in classification of data. Whenever you want to prepare any financial accounts, you must to follow one procedure, that is single entry or double entry system. When we prepared our single entry system, first of all you write down the journals, afterwards ledgers, afterwards accounts, and afterwards if you want to know the profit or loss of your organization, then you must to prepare the profit and loss account. Now finally, if you want to know your assets and liabilities for the financial year which is covered in your past year, then you will be prepared your balance sheet. In our balance sheet we have the 4 columns. Those are, first one is liabilities. If you want to know the exact current liabilities of your organization, you must to write down the sequence of your liabilities which is directly covered in your organization. Those are, first of all, write down the fixed liabilities and current liabilities. As usual, you must to write down in your assets side also. First of all, fixed assets, and the second one is current assets. Now next one is making summaries. The classified information of the trial balance is used to prepare profit and loss account and balance sheet in a manner useful to the users of accounting information. The final accounts are prepared to find out operational efficiency and financial strength of the business. Analyzing. It is the process of establishing the relationship between the items of the profit and loss account and the balance sheet. The purpose is to identify the financial strength and weakness of the business. It also provides a basis for entrepreneurship and interpretation. Now next is the main important side heading, which is based have a important role interpreting the financial information. It is concerned with the explaining the meaning and significance of the relationship established by the analysis. It should be useful to the users so as to enable them to take correct decisions. Now next one is communicating the results. The profitability and financial position of the business as interpret above the communicated to the interested parties and at regular intervals as so as to assist them to make their own conclusions. Now we will be discussing the limitations of financial accounting. Remember one thing, if you want to know thoroughly depth knowledge regarding financial management, you must to cover the introduction of the management and branches of the management and accounts, branches of the management and objectives of the management and analysis of the management and advantages of the management and procedure of the accounting preparations, and last you must to have one conclusion. Before entering the conclusion, you must to know the limitations of the financial accounting, then only you will become under the conclusion. Financial accounting is concerned with the preparation of final accounts. The business has become so complex that mere final accounts are not sufficient in meeting financial needs. Financial accounting is like a post-mortem report. It means that always you prepare your final accounts after completion of your transaction only. It means that final accounts will be useful to know the profits and expenditures as usual, your assets and liabilities. It means that after completion of the action only you will be analyze how much transaction is occurred in your previous year. Afterwards it will be no use to present year, but it is a historical asset to take a decisions for the purpose of your future planning, especially in financial mode. At the most it can reveal that has happened so far, but it cannot exercise any control over the past happenings. It records only quantitative information. It records only the historical cost. The impact of future uncertainties has no place in financial accounting. It does not take into account prices levels changes. It provides information about the whole concern, product wise, process wise, department wise. Information of any other line of activity cannot be obtained separately from the financial accounting. Now next point is cost figures are not known in advance. Therefore, it is not possible to fix the price in advance. It does not provide formation to increase or reduce the selling price, as there is no technique for comparing the actual performance with that of the budget targets. It is not possible to evaluate the performance of the business.